Back to more analysis, and now we're putting the spotlight on the banking space. We've got a whole host of Q3 updates from a lot of lenders, from NBFCs as well. And some of the early trends indicate that, A, obviously there is stress in the MFI segment, but B, this whole fight for deposits. While banks are able to mobilize deposits, the question is at what cost? Is the cost lower credit growth? Is the cost lower CASA? That seems to be the takeaway from a lot of the Q3 inputs that we've got so far. Well, let's take this up with Ajit Kumar, who's Vice President, Equity Research, Banks and Financials at Nomura. Ajit, great to have you on the show. Thanks for taking the call this morning. And what I just summarized was at least some of the key trends that I noticed. And I remember looking at the HDFC Bank update very, very closely. They managed to, shore up deposits by almost 16% year on year. But look at where that deposit base is coming from. It's term deposits, which are costly, and their CASA has been coming down. Now, is this limited to just a few banks, or is this symptomatic for the whole sector? And therefore, in this environment, how should investors approach banks?
Yeah. Thanks, everyone. Thanks for having me. Good morning, everyone. So, Surbi, just one thing, I cover NBFC here. Param is the one who covers, banks.
Okay.
So, probably I can give you, our outlook on the NBFC that we published recently, if that is okay with you.
Sure, absolutely, Ajit. So, on NBFCs, I mean, let's start with the good news first, and then we'll come to some of the, some of the more concerned asset quality areas. Larger NBFCs, for instance, Bajaj Finance, etc., they've still managed to show pretty steady growth in AUM. What are the key trends that have come to surface for you? Yeah.
No, you're absolutely right. They reported their 3Q25 pre-quarter numbers, and it was strong across all the parameters. Loan growth was strong at 28% YOY, which was in line with our estimate. But more importantly, customer addition at 5 million was highest ever. Even new loans booked at 12 million was also highest ever. This is strong loan growth, record customer addition, and new loans booked highlight, growing confidence in the asset quality side. So just to rewind, management had guided for roughly 205 basis point of credit cost in FY25, which should be, I think, largely fine. Maybe actual credit cost in FY25 would be 5 to 10 bips more than that, but that's it. I think market, our investors in third quarter result will be very closely tracking the credit cost number, which is increasing for all the NBFCs from past, let's say, 10 to 12 quarters. On the positive side, we expect credit cost to peak out in third quarter for most of our coverage companies, which excludes, MFI companies for the time being. And then from 4Q onwards, we expect, credit cost to normalize. And if NBFCs can control their asset quality issues to a certain extent, that along with only the narrative of rate cut would be enough to keep things fine. So our sense is this quarter is going to be kind of a pivot quarter where we are going to see some kind of stabilization in the credit cost side, and which is going to be positive for NBFC stock.
Okay, all right. Good morning, Ajit, and thanks a lot for joining in. Ajit, let's talk about a couple of stocks. And when you compare stocks with their historic valuations, the one that stands out is Bajaj Finance. It's gone through a period of, consolidation, a bit of underperformance as well, after having a dream run for close to around 10 years. You have upgraded the stock. Give us the top 3 points because with regard to this upgrade.
I think with Bajaj Finance, the loan growth was always the strong point with them. Even if you, let's say, look at last 10 years, CAGR loan growth has been more than 30%. From past, let's say, 1 year or 1.5 years, what is bothering the investor is the credit cost trajectory. If you look at, their cross-cycle credit cost is ranges somewhere between 120 to 150 basis point. But let's say from last 1 year to 1.5 years, the credit cost has been a little bit on the higher side, somewhere between, let's say, 180 to 210 basis point. That is something which is kind of, bothering the investors. And this is also understandable because if you look at the loan composition, roughly 35 to 40% of the book is unsecured in nature. And in last 1 year or 1.5 years, we have seen, increase in delinquency in the unsecured side, whether it is personal loan, whether it is credit card loan, whether it is microfinance loan. Now, on the margin, at least in personal loan and credit card, things looks to be improving. First of all, growth has slowed down, across all this unsecured segment, whether it is banks, whether it is NBFC for banks, unsecured loan growth in personal loan has come down to single digit. Even for NBFC, recently RBI put out in the financial stability report, your unsecured loan growth even for NBFC have come down, let's say from 45% to 35%. So loan growth has come down. There is some bit of consolidation which has happened in last, let's say, 1 to 1.5 years. RBI also highlighted in its FSR report that incremental credit in the unsecured space
Right.
is coming from the more, prime customer rather than, from the, let's say, subprime customer. So on the margin, it looks to me that, credit, we should be somewhere near the peak of this asset quality problem. At least in the personal loan and credit card side, we are still, by the way, very negative on MFI as a space. But yes, I mean, Bajaj Finance is not very, not, much present in the microfinance side. They're, mainly present in the personal loan side, where things on the margin is looking to improve. And if they can contain their credit cost, broadly within the range of what they are guiding for, and their guidance is roughly 205 basis point in FY25. I think if the actual outcome is nearby, that number, our sense is this stock is, ripe for re-rating.
30 seconds, Ajit, is so, because there is, for financials, the investable universe is banks also, right, which are also, I mean, it's the constant refrain that it's attractively valued, large banks. So are NBFCs a bit of a hard sell right now when you meet investors? Why not buy a large bank, I mean, at a cheaper valuation? Or, and if they had to pick one or two names, one would be Bajaj Finance, and anything else? Go on.
Yes, so we have upgraded, SBI card as well recently, along with Bajaj Finance. We upgraded both, and the argument broadly remained the same here as well. Even in credit card, lenders have taken corrective steps, and as a result, lenders, including SBI card, have cut down on the lower quality borrowers. For example, at the industry level, share of metro region is going up in the credit card mix in last, let's say, 2.5 years, reversing the trend that we witnessed during, FY21 to 23. In last, let's say, between, FY21 to 23, higher sourcing from riskier customer cohort like non-metro customer, younger population, self-employed customer was the main reason for asset quality deterioration at the first place, which is now reversing in, let's say, last 2.5 years. At the same time, your leverage level or limit per account, everything has been going down in the non-metro region versus, let's say, metro region. So all the low quality customers are being removed, and that is why credit cost looks to be that it is going to peak out in next few quarters. Yeah.
Thank you for joining us. Appreciate you coming on, and we'll speak again soon. Longer chat, but helpful. Bajaj Finance and SBI Card, 2 upgrades coming in from Nomura.